Could massive No Kings protests across the US trigger a stock market crash and affect your portfolio? What if tech stocks, the US dollar, and your retirement savings are all at serious risk right now? And more importantly, what should you be buying instead to protect your wealth? No Kings represents opposition to current policies and raises fundamental questions about the stability of American institutions. You might think this is just political news with no connection to your investments, but that is far from reality. If the protest continues to gain momentum, it could very well become a black swan event that triggers major stock market volatility and forces international capital to flee the US. In this video, we'll be revealing a critical investment survival strategy. When political uncertainty in America skyrockets, where should you pull your money from, and where should you move it for maximum safety? First, let's examine the stock market. If the No Kings protests evolve from a temporary phenomenon into a sustained, expanding movement similar to Occupy Wall Street in 2011 US, stocks will face three devastating blows. The first threat is systemic risk and uncertainty, when citizens march through streets holding signs declaring democracy is not a monarchy and the Constitution is not optional. This directly intensifies political polarization in America. Congress will struggle even more to reach consensus, and policy implementation will slow dramatically. And what does the market fear most? Uncertainty. During such periods, the VIX Fear Index typically spikes sharply. The S&P 500 and Nasdaq indices could decline significantly in the short term. If situations escalate into strikes or conflicts like Occupy Wall Street in 2011, the entire market environment becomes highly unstable. The second threat is economic disruption and corporate profit damage. Economic disruption directly impacts corporate profitability. If protests escalate and block major transportation hubs or force business closures, large companies dependent on logistics and physical retail, like Amazon and Walmart, will see immediate revenue impacts. Even more concerning is the severe damage to consumer confidence. When people feel uncertain, spending stops. We witnessed this during the 2020 pandemic and protests, which triggered major index declines. Reduced consumer spending drags down GDP growth, squeezes corporate profit margins, and naturally depresses stock valuations. The third and final threat is international capital flight. Global investors buy U.S. stocks based on confidence in American institutions and the American economy. Once protests become prolonged, the international capital begins thinking, America is becoming unstable. The risk is too high. This could result in tens of billions of dollars exiting rapidly. When capital flees, the most vulnerable assets are growth stocks, especially tech stocks relying on growth narratives to justify valuations. The Nasdaq index would suffer another major blow. This raises an important question. When political risk triggers foreign capital flight, what else gets dragged down besides the stock market? Do you agree that political uncertainty impacts tech stocks more severely? Share your thoughts in the comments below. Next, let's examine an asset closely tied to everyone's financial well-being, the US dollar. The dollar has long been the international reserve currency and the ultimate safe haven asset. However, the dollar's strength depends entirely on global trust in American political stability and institutional reliability. The No Kings protests are significantly eroding that trust. When society becomes divided, business confidence evaporates, consumer spending freezes, and government policy implementation stalls. Economic fundamentals weaken, and the dollar's strength loses its foundation. If chaos persists, international investors will demand higher returns to compensate for increased risk. Money will flow out of the United States, inevitably pulling down the dollar exchange rate. A weaker dollar makes imports more expensive, creating inflationary pressure for import-dependent economies. The Federal Reserve may hesitate even more to cut interest rates, which continues pressuring corporate borrowing costs. Here's a critical insight. The dollar's crisis creates an opportunity for gold. Gold is not a credit-based currency, it is a tangible hard asset. When cracks appear in social credit systems and political structures, gold's safe haven appeal immediately activates. Political uncertainty continues escalating. These protests have spread across all 50 U.S. states, with activity in over 2,700 locations. This reflects deep American concerns about political polarization and raises global doubts about institutional stability. Gold ETF holdings have been steadily increasing recently. What does this signal? Historical precedent provides clarity. Whenever social unrest occurs and policy gridlock prevents consensus, investors actively seek safe haven assets like gold. If protests escalate to federal and state government conflicts, this division makes policy implementation even harder and uncertainty more severe. Money then flows from stocks into gold. Now, let's connect the dots for this entire analysis. First, political uncertainty directly triggers market panic. Panic depresses U.S. stock valuations and spikes volatility. This represents the first stock market impact. Second, political uncertainty damages economic fundamentals. Weakened fundamentals trigger a dollar trust crisis, leading to dollar depreciation. The pattern is clear. Whether examining stock markets or currency markets, the core driving force originates from political risk generated by the No Kings movement. Therefore, the investment strategy becomes crystal clear. If you assess that this No Kings movement will continue fermenting long-term, you must execute a major asset reallocation. Step 1. Reduce U.S. stock positions, especially high-valuation growth stocks. Since corporate profits and valuations face pressure, reduce positions quickly. Don't keep all your eggs in a basket currently suffering 3 simultaneous blows. Step 2. Embrace gold and capture the safe haven premium. During political turmoil and dollar credit erosion, gold's inflation protection and risk avoidance advantages become particularly prominent. Gold preserves asset value and will likely experience strong, sustained upward momentum. Recent increases in gold ETF holdings confirm this trend. Major capital is already quietly repositioning. To put it simply, sell uncertain U.S. stocks and buy reliable hard asset gold. Investment risk represents the greatest cost, and understanding market dynamics protects your gains. Hey, if you found this analysis helpful, make sure to like, subscribe, and turn on the notification bell for more deep dives into global markets and economic trends. We'll see you in the next one.